Hi guys, today I want to talk about home insurance revolution. This is a very complicated topic because it involves so many different parties, so many players, and the issue is so complicated. But let's begin with the significance. Why does it matter? Let's look at some figures. Like Census Bureau tells us that in 2022 there were 127 million households in the U.S. Okay, household. So if you do the math, translate that, that's about 245 million people that were somehow involved with the home insurance. Okay, so that's one thing. Another thing, to bring this into perspective, let's compare that with the health insurance. In health insurance, we know there are 92% of the Americans at this one point of time, also in 2022, they have some kind of a health insurance. So you divided the whole population of the U.S. and multiply by 92%, you basically get 304 million people covered by health insurance. So not quite so that the home insurance not quite cover as many people as health insurance, right? So we're talking about 304 million versus 245 million. But the important thing is that the number one insurance is health insurance, which the biggest, we call it the biggest penetration. Number two is probably auto insurance because it's required by law and everybody drives in this country, right? And then after that, after this health insurance, after auto insurance, then home insurance number three. So know the market size, know how big the market is. That's first step. Then we have to look at why do we want to have a home insurance revolution, especially the supply side home insurance revolution. And then for that topic, we have to look at where is the problem. Okay, then. I don't have to tell you that almost every day or at least once a week, you see some news report saying that some families, some household will face, significant premium increase or a lot of non-renewal. So people usually put this together. One is called home insurance availability, meaning that they're not always available. Some families, they may not be covered by the insurance at all, by home insurance at all. So that's one. The second thing is that affordability, meaning that the premiums increase so much that people cannot afford it. So people usually talk about these two things together: affordability, availability. But a lot of people fail to see it, that affordability is actually smaller issue than availability. Whether somebody want to have a home insurance but cannot get it, that's the problem. Especially today, we are facing a seller's market in the insurance. That means that the seller, the insurance companies, the insurance carriers, they have the final say whether to cover you or not. And then so in such a seller's market, it matters very important that if you cannot get insurance, you are basically out of luck. The only choice basically for you is to go to fair plan. That basically insurance of the last resort. The reason why is that when a home is become non-renewable, the insurance decided to say, we cancel your policy, we're not covering you anymore. The bigger problem there is that no matter how much money you want to pay, they won't cover you. So your home basically becomes something called uninsurable. When a home becomes uninsurable, the market, demand is significantly going down because not many people would buy it, and then without many buyers, your value, the value of your home will go down because it's everything determined by market, right? So this is the problem. We try to avoid become uninsurable as much as possible. The reason being that if a home become uninsurable, then the value goes down by how much? By 12%. There's one study by a State Street. It's a nonprofit organization. They have some report. They've done study to show that if a home become uninsurable, its value is no longer the value that you believe it will be. It will have to go down by 12%. That's more than 10%. That's a big deal. And that's just for the individual homeowners. What about the local economy? What about the whole taxes? Everything goes down. If the real estate market value is down, the local taxes, the schools, all the other social programs will have to go down. Because what? Because your tax revenue of the government is going down.